of the expected move. Well, fairly close to a test of the expected move earlier today. Actually, a failure of the long-term trend, though. We did not break above it. Possibly next week, going into FOMC Monday, Tuesday, we get a continuation of this upside move. A lot of weakness today. Short vol pulling back positioning, de-risking, which is maybe not a good sign so close to the prior high. But a lot of the puts that got sold here for September OPEX were buried. Today they were out from underwater. I don't think they took their chances, so they just closed them out. With some of those closed at least today, that may add some strength going into Monday, Tuesday, if they should double down on short vol. So far, still VIX above 16 and not very much short volatility pressure. Given our move up from the low, not a lot at all. Closed above the long-term trend on ES here. Little bit of consolidation. The next upside target's going to be 56.46, just to the upside of us. Failure of 56.20, probably a retest at 5600. If we retest 5600, there's a decent chance that this starts to break down. We'd be looking at it like 55.62, maybe into the back half of next week. This week's still closing very strong with a higher high than the prior week, so it should infer a continuation into the beginning of next week, at least from a technical perspective. Commodities double bottoming and starting to move up. The move up in commodities probably not that bullish, and something we should be keeping an eye on. It's just a bit off of the long-term trend. Hold on. If we see this index move back above like 100, that might make a pretty big difference. Precious metals still rocketing on the falling dollar. Copper up. Agricultural commodities kind of moderating today, and oil staying just below $70 a barrel. Although I do think it got kind of close to it earlier today. I think at its high, maybe 69.28. Yeah, so it didn't. Yeah, almost broke out to 70, but got rejected, which may have driven the rejection in oil. Oh wait, this was earlier. Yeah, it did hit 70 today. Sorry. Actually, that rejection in oil may have done a lot to weaken the S&P. Anyway, Dixie has continued down. It broke down from its high where it got support, and fell. I think it was like 50, almost 50 points yesterday, another 13 today, falling sharply against the yen, where BOJ is expected to cut like another 15 to 25 points at their next meeting. I think it's like a 90% expectation. And then that coupled with the Fed rate cuts have seen the dollar decline pretty rapidly from, like a month ago, especially yields at the back end of the curve. 30-year falling below 4% today. Despite getting slightly over 4% at auction yesterday. Correlation turned around a little bit into the end of the day, but not enough. And we are starting to find support right around the range that we found it back at the August highs. It does not appear that short vol is continuing to layer on beyond this point, or at least they didn't today. So we'll see what happens next week. But we may not see short vol come in with any strength until after the FOMC decision, once the unknowns are known. Leverage on the carry trade turned up into the end of the day, as the dollar caught a little bounce. Leverage is still staying pretty elevated on the 3-month, a little less on the 6, but moving up on the top end, back to about 6.3x. From today's low of 6.25. We're getting really close to falling below where we were when the market, when Nikkei almost crashed, and just barely stabilizing above that. I think the carry trade will probably stay somewhere in this range, especially if we have stronger retail sales. We'll see a bump in leverage going into the BOJ meeting, but there's still a lot of leverage there. And if both ends of the carry gets squeezed at once, that's going to be rough. If the Fed cuts and the BOJ raises, it's going to be probably pretty volatile. Not much. Correlation turning back up a little bit on the 3-month day over day. some of the tail risk hedging pulled back yesterday. I'd imagine we saw that come back in again today, though. But yeah, a little bit of a drop off and bought out of the money puts. 53.87% of the S&P over its 20-day moving average. We got a big drop off in correlation between VIX and cash VIX today, although some of that is also because we're approaching the VIX expiration next Wednesday, and so we might get a little bit more volatility falling off into that. And then also I expect that in and of itself, that expiration will be fairly volatile as well. Fed fund futures still pricing in more than 0.75 rate cuts. We did trim down overnight to about almost 3 rate cuts and bounce back with the heightened inflation expectations from today and slightly stronger consumer sentiment. So where does that leave us going into next week? Well, on the weekly, I mean, things look bullish. This is a confirmed bounce. It's pretty strong. We broke back up above the 55.70 level. We'd be looking towards, the all-time high, or at least the prior high for resistance at 56.51. Today rejected earlier than that, which may not be a good sign, but it wasn't a strong enough rejection. It indicated any kind of reversal or anything like that. On the 1 day, we are seeing diminishing returns as price goes up, but we're still seeing consistent ones. I would expect that upside range is going to continue to trim down as we stay above gamma neutral. But I think there's enough time that we could at least retest the all-time high. And then, obviously the Fed rate decision will come into play. But if that's not particularly negative, or if it's, just a 0.25 cut, then we could possibly continue to push higher towards, 5,700. And the top of that that's a very long-term trend, but from December to July's high, December 2021, and that's going to be around like 57.30-ish. At which point we'll probably get Vega, Gamma Max, Vega Neutral pretty close to spot, and it's going to be hard to go any higher than that, right? And we'll probably get like a small correction after that. Actually, the only thing that bothers me about that is that Gamma Max and Gamma Vega Neutral on the SPX chain are still very, very far out of the money. Like they're up around like 5,800, which would be the next stop. But that's like the .com bubble trend. So maybe the 1929 trend. That might actually be the trend from 1929. Well, .com bubble and 1929. We don't test that one often, but we're very close to it. Usually doesn't end well, at least not historically. When does the yield curve uninversion start to matter? When it sticks with a rate cut. Remember, even if Powell doesn't, honestly, if Powell only cuts 2.5 and says they're like data dependent, like a hawkish cut, right? We could see the yield curve reinvert. It's not Sunday yet. Well, I mean, I'm just pointing out the technical level there. It's interesting. Thanks, Kirk. Have a good weekend. You too. I'll see you guys Sunday for the Sunday stream. I hope everybody enjoys their weekend. No problem. Thanks, guys. See ya.